I'm here today with Patrick Moloney, CEO of Litigation Capital Management, to discuss their full year results. Patrick, could you give us an overview of the year for LCM?
Sure. 2019 was a year that LCM built out its platform in preparation for growth. 2020 was very much a year where LCM built on that and grew its business significantly. A milestone for LCM was the establishment and commencement of its asset management business. We've started that business with our first third-party fund, where LCM acts as fund manager. That third-party fund was closed at $150 million. We were extremely happy with the quality of the investors into that third-party fund, the two cornerstones of which have secured the right to participate in our next two funds, giving us really the basis for building that asset management business out. Notwithstanding that we launched that asset management business and commenced and closed that fund in March, by 30 June, we had committed that fund to just under 50% of its capacity. And by September, when we're doing these presentations, we had committed to 61% of its full capacity. So we're very, very happy with the way that asset management part of LCM's business is growing. In terms of revenue growth, that increased during the financial period, notwithstanding the headwinds and the disruption associated with COVID-19. In terms of applications received across all of the territories that LCM operates, a significant increase of 25% compared to the year prior. In terms of total assets under management or disputes under management, being the combined commitments of both LCM's direct investments and its asset management business, by 30 June, they were $250 million. And by September, when we're presenting our full year results, that had increased to $304 million. It's a very, very significant growth in terms of the overall portfolio of investments that LCM is managing. We're seeing a year-on-year increase in respect of the total capital that LCM is investing into its portfolio of disputes in a given year. So compared to the 2019 year, we're up 87% in terms of the level of capital investment that we have put to work in our disputes funding business. We've also looked closely and strengthened our referral sources. So LCM is continually looking at innovative ways in which to attract the best quality investment opportunities in the dispute space. During the year, we entered into two new and revolutionary law firm strategic alliances, both with global law firms, and both of which have already generated investment opportunities for LCM. And those strategic alliances, which were entered into during the financial period, will provide us with a steady stream of quality opportunities as we build into the future. In terms of our corporate portfolio strategy, during the financial period, LCM closed and entered into its largest corporate portfolio ever, a portfolio involving 20 separate global disputes with a capital commitment of up to $34 million. So we're very pleased with the way that our corporate portfolio strategy generally is evolving and growing with the company.
Please, can you elaborate on how this has flowed through into the full year performance?
The full year performance for 2020 for LCM was positive. Gross revenue increased, as did gross profit. Adjusted profit before tax and statutory profit before tax were both marginally down, consequent on two factors. The first was the slippage of three investments from the current financial year into 2021 as a result of the slowdown in the court system due to the onset of COVID-19. The second factor that needs to be borne in mind in terms of fluctuation in earnings from year to year is that litigation finance, by its very nature, involves a somewhat lumpy revenue line. That shouldn't be a cause for concern for shareholders, given that LCM does not apply any fair value to its book of investments. Over a period of time, and as LCM's portfolio of investments grows, we should see the introduction of a smoothing of that revenue line over a period of time. So in terms of looking at the performance of LCM on an ongoing basis, the things to really look for and to measure LCM's growth are, first of all, funds under management. So look at the asset management business, which we have recently launched. An increase in funds under management year on year indicates that LCM has the capital to build this business. Secondly, it's the number of applications that LCM receives and the conversion rate of those applications. So during financial year 2019, 419 applications were received. In financial year 2020, 522 applications, an increase of 25%. The next measure is capital committed during a relevant period. If we look at 2019, $98 million of capital was committed by LCM, and in financial year 2020, that increased to $147 million. Overall, in terms of the portfolio that LCM was managing, in terms of capital commitments as at 30 June of 2020, the total was $250 million. The next measure is capital invested, so actually putting LCM's or assets under management to work. In financial year 2019, the amount invested was $27.8 million, increasing in financial year 2020 to $52 million, a significant increase. The other thing that investors look at is that we're still continuing to perform and the financial metrics within an acceptable band. So LCM's 9-year cumulative portfolio return on invested capital, inclusive of losses, is running currently at 134%. Similarly, its 9-year cumulative portfolio internal rate of return, including losses, is 78%. Investors should look to those factors and measure LCM against those factors moving forward. And when one does that, they can see that LCM is growing in an incredibly healthy way.
With the two distinct business models of alternative asset management and direct investment, can you provide an update on each of these portfolios?
So LCM's direct investments are investments made from capital on LCM's balance sheet. It's a direct investment and it fits into two categories. One where LCM is funding the dispute to 100%, and then a co-funding arrangement with the asset management business. So in terms of LCM's current portfolio of investments, whether they be asset management or direct, we strive for diversity across the portfolio. And that diversity is in relation to industry, it's in relation to capital commitment, and it's in relation to sector. So if we look at the current direct investments portfolio, it's $107 million. Then there's a $64 million commitment in respect of co-investments with the third-party fund. And of that, $65 million has already been funded, leaving a capital commitment to be funded by LCM of $106 million. The portfolio currently comprises 23 separate investments at 100% and a further 18 investments co-funded. Those investments are made across commercial disputes, insolvency, class actions, and portfolio funding, as well as arbitration. In terms of LCM's Global Alternatives Returns Fund, we're currently funding 18 separate investments. Again, we're looking at diversity of that portfolio across industry sector and across capital commitment to ensure that we don't suffer from concentration risk. In terms of that fund, we're currently, as at September 2020, committed that fund up to 61%. So in Australian dollars, there's 133 million committed, with a further $84 million to be committed.
Has your industry been impacted by the pandemic?
COVID-19 and the pandemic has influenced global markets generally. LCM as a company and as a business has been very fortunate to have been able to adapt very quickly to operations remotely in all of our offices. So In terms of productivity, LCM has been very fortunate that there's been no impact in terms of productivity upon LCM. There's been a small impact in terms of the speed with which our investments travel through the court system. There's been some small delays, which has resulted in 3 of our projects, which we're anticipating completion in 2020, being pushed into the 2021 year. Importantly, unlike other businesses, in circumstances where there's a delay in an investment, it doesn't mean that investment's lost or any capital impact. Indeed, it's often the case that those investments become more attractive to LCM because we get paid as a multiple over a period of time. In terms of market conditions generally, the instability in global markets tends to operate favourably in a counter-cyclical way for the litigation finance industry. And that manifests itself in a couple of ways. First, corporate users of litigation finance have a tendency during unstable and turbulent markets to want to preserve their own balance sheet and capital and their cash flow to use on their core business. And that drives them to look for alternatives in terms of their dispute spend. And that has already been seen by an increase in applications during the past 6 months that we have received from the market. And secondly, if we look a little further down the track, we are expecting that as a consequence of economic conditions generally globally, there will be an increase in the number of insolvency events and insolvency and restructuring litigation, which is an area that LCM has considerable expertise in, having been one of the founders of litigation finance as an industry and spending probably the first 8 to 10 years of its existence solely funding into that part of the market. Just touching upon the uncorrelated nature of disputes finance as an asset class, instability in global markets is not something that influences our investments or the outcome of our investments. Lawyers, barristers, judges, or arbitral tribunals don't apply different legal principles to the adjudication of disputes simply because there's instability in global markets. Therefore, the outcome of our investments, with the exception of slight delay, is not affected or changed by instability in global markets. But even more than that, each individual investment that LCM makes is uncorrelated to the next because it relies upon a different substratum of facts. Therefore, when we experience times of economic uncertainty such as we're facing now, the uncorrelated and the counter-cyclical natures of LCM's business is a tremendous advantage.
And what's the outlook for LCM for the year ahead?
LCM's strategic priorities into the next financial period and beyond are first to build on our asset management business through the closure of a second fund. The first fund closed in March of this year, and as at September, we have that fund committed to 61%. We are starting now to look and to make the necessary preparations to launch a second fund, which we expect to be significantly greater in terms of the capital commitment. And we were certainly looking to launch that into 2021. We are seeking to increase both the number and the quality of the applications that LCM receives. Historically, we have a very low conversion rate of between 5 and 7% of applications that get converted into funded investments. Through a number of strategies, including our strategic alliances with global firms, we're looking to increase the quality of those applications. In terms of law firm alliances, we're looking at those relationships in a very innovative way so that we can offer to clients of the law firm a greater suite of litigation finance products to assist them in dealing with their disputes spend. In terms of our portfolio strategy, we're very much focused on expanding our corporate portfolios that we're offering into the market. LCM is currently a global leader in terms of providing corporate finance products in the area of disputes. We'd seek to build upon that experience and expand that strategy into the market going into the future. Finally, expansion into new regions and territories. As with previous expansion that LCM has undertaken, we'll do so in a very measured and disciplined way and ensure that we have the right quality personnel on the ground to deal with those jurisdictions. There's significant opportunity in new regions, and the market penetration of litigation finance is incredibly low. And if we look forward into the future generally, with market conditions as they are, there's a significant increase in the demand for litigation finance as a financial tool to assist in unstable and turbulent markets. And we see the future as incredibly bright.